Welcome in this video, Zbcn coin direction, which way? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. This trend is characterized by the price forming lower highs and lower lows with each attempt. However, recently, some significant technical clues have begun to emerge, indicating that this downward structure may be weakening. In particular, the fact that the price is reacting more strongly after repeatedly touching this descending trend line could suggest that the trend is nearing its end. At this point, the potential for the price to break above this trend line could be interpreted as the initial signal of a possible upcoming rally. Descending trend lines typically act as strong resistance zones in technical analysis. Breaking through these lines is one of the strongest technical signals that the market may be changing direction. In the current scenario, the chart clearly shows that the price is approaching this resistance line and beginning to apply upward pressure. If the price manages to break above this line, it would not only be a short-term technical development, but also a signal that the long-standing bearish sentiment has been broken, and that buyers are now playing a more dominant role in the market. Technically, the breakout of such a downtrend is seen as a highly positive development by investors. This breakout signals that the downward pressure has ended, and that the price is now seeking a new direction. This new direction is generally upward. As buying pressure increases, sellers retreat, and investor sentiment begins to support upward movement. If this breakout occurs with strong volume, the potential for a more powerful and sustainable rally increases significantly. Recent price action shows that there has been an increase in buying interest near the descending trend line, with higher lows beginning to form and noticeable volume increases occurring. This is extremely important from a technical standpoint. As the price approaches the downtrend line while maintaining strength and making shallower pullbacks, the potential for a breakout increases. In other words, the downtrend may have weakened and been replaced by a preparation for a bullish move. Additionally, the breaking of this descending trend line is considered a trend reversal in technical analysis. This means that a price which has been trending downward for some time may now be taking its first steps toward a new uptrend. This is a critical moment both for short-term traders and for those developing medium to long-term strategies. Once the trend line is broken, the price typically begins a fast and strong upward movement. That's because this breakout is driven by both technical reasons and psychological factors. Especially in cases where the trend has been in place for a long time, the move that follows the breakout can be even more intense, as it indicates that the market pressure has become unbearable and buyers have finally taken control. When the chart is examined carefully, it becomes evident that the price has been consolidating within a narrowing structure for a certain period, showing indecision in determining its direction. This technical structure is commonly referred to as a classic flag formation. Flags are generally considered continuation patterns within a trend and often appear after a significant price move. What stands out the most here is that the price has entered a brief consolidation phase following a strong upward trend. The compression structure formed during this consolidation holds significant technical importance, as such flags typically break in the direction of the prevailing trend. Therefore, the current formation may signal a potential upward breakout. A key feature of the current flag formation is the price movement being squeezed between a descending trend line from above and a rising line of higher lows from below. This structure may also resemble a triangle pattern. However, in a classic flag formation, this compression is usually seen as a parallel or slightly downward sloping channel. While the price moves within this channel, volume tends to decrease, and trading activity slows down. From a technical perspective, this signals that a major move is approaching. The volume drop acts as a preparation stage for a breakout, and once the breakout occurs, the declining volume typically shifts to a surge in volume in the breakout direction. What's important in flag formations is the direction of the breakout. Of course, both directions must be considered as possibilities, since there are no certainties in technical analysis. However, the current market structure, the nature of the trend, the positioning of indicators, and price behavior offer various clues about the likely breakout direction. In this context, since the overall trend of the price is upward, it is more likely that the breakout from this flag will also be upward. A flag is essentially a resting phase following a prior bullish move. After this phase, it is technically more probable for the price to resume its upward momentum. In technical analysis, specific target levels can be calculated based on the breakout direction of a flag formation. In the event of an upward breakout, the target is usually the length of the previous upward move, referred to as the flagpole. This height is measured from the start of the rapid move prior to the flag and added above the breakout point of the flag. These technically derived targets serve as important decision points for investors. If the price moves toward these targets, it may maintain positive momentum and form even larger structures. Additionally, the way the price responds to the upper and lower bounds within the flag appears quite healthy. This confirms the validity and reliability of the formation. The price has repeatedly found support at the lower boundary of the flag and faced resistance at the upper boundary. This compression is a classic technical sign that indecision among investors is increasing and that a breakout may be near. The price may now be preparing to make a strong move in one direction, and if that move is upward, the overall market sentiment could turn more positive. At this point, the most important strategy for investors is to closely monitor the direction of the breakout. Entering a trade before the breakout occurs can be technically risky. However, taking positions at or after the breakout is much safer and more rational. Therefore, setting alerts on the upper and lower boundaries of the flag or closely watching these levels can provide a significant advantage. A breakout accompanied by volume indicates a stronger directional move. Thus, attention should be paid not only to the candlestick close, but also to volume data. In conclusion, a highly notable flag formation has developed on the current chart. This structure indicates that the market is approaching a decision point and that the price is preparing for a strong move in one direction. According to the discipline of technical analysis, breakouts following such consolidations tend to be more meaningful and high in volume. If the price breaks out to the upside, this will have a positive impact not only from a technical perspective, but also on investor psychology. Therefore, it is crucial for investors to monitor this pattern closely and shape their strategies according to the breakout direction. The MACD indicator is an extremely valuable tool that is often used in technical analysis, showing both trend direction and momentum strength. In the current outlook, there is a very promising structure on the MACD side that will herald a positive development. In particular, the interaction between the MACD line and the signal line tends to create a potential upside crossover that will attract the attention of market participants. Moreover, this crossover seems to be preparing to take place above the zero level, which is an extremely important and positive technical development. The relationship between the MACD line and the signal line gives us a clear indication of the momentum and direction of price movements. If the MACD line is preparing to cross the signal line from the bottom to the top and the crossover is above the zero line, this could signal a positive breakout for the market. This is because crosses above zero are very strong signals that indicate not only a reversal, but also the continued strength of the trend. In such cases, price movements usually accelerate with an upward momentum. MACD indicator crosses are very important. We must look at them constantly. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.